Welcome to Crypto Millionaire Academy. Thank you for following the channel. Don't forget to subscribe to the channel and like the video. We appreciate your support. So today's video is going to be about Terra Luna and the crash that happened. That the massive crash. Basically, this crash was like the Lehman Brothers of cryptocurrency. Over $80 billion in volume was lost. $80 billion in money and value was lost. And it was probably the largest crash in crypto history. It was Terra money. Now, so I'm going to go over the crash and why it happened, and should you buy Luna? Because there are going to be people out there tell you, hey, Luna is now under a penny, now you should buy it. And I'm going to tell you why you should not do that, because most likely you're going to lose your money. And I'm going to tell you why you should not buy Luna under a penny, okay? Because this crash is not, Luna's not coming back, and I'm going to tell you why I believe it's not coming back. So, first of all, let me go over what Terra Luna is. Terra Luna was programmable money for the internet. You could spend, save, and stake like never before. Terra is a public blockchain protocol deploying a suite of algorithmic decentralized stablecoins which underpin a thriving ecosystem that brings DeFi to the masses. This is their website, terra.money. Okay, so I'm just going to show you their website and what Terra Luna was. Now, they had a lot of big backers, such as Coinbase, and a lot of people were backing this project. So here's the price. As you can see, a couple of days ago, it was $95 per coin, and now it's under a penny. All right. I'm going to go over what happened, and as you can see here, there's a warning here at the top. Due to the depegging of USDT, Luna experienced extreme volatility. Please proceed with caution. The Terra blockchain was also halted. And as you can see, the price on CoinMarketCap and CoinGecko basically kind of match. And I'm going to go over what happened with Terra Luna. So basically, this is the article on C. Now I'm going to go over a few articles. Luna cryptocurrency collapse, how UST broke and why it matters. Last week, a Luna coin was worth $85. Now it's worth a penny. Here's why that matters, okay? I'm not going to read the whole article, but I'll read some of it, okay? So what's more unusual and much more important is the collapse of the Luna cryptocurrency and its associated Terra USDT stablecoin. You may not have heard of USDT before or know what a stablecoin is, but it's a big deal. Billions of dollars in crypto wealth has been vaporized, sending shockwaves through the whole market. There are two intertwined stories here, that of the UST stablecoin and that of Luna, both of which are a part of the Terra blockchain. The USDT coin is designed to retain a value of $1 at all times, but it depegged on Saturday and has since fallen to a low as 30 cents. Then there's Luna, the centerpiece of the Terra ecosystem. Its value has collapsed in one of the most stunning crypto crashes ever recorded. The coin's price fell from $116 in April to just a penny on Thursday. Its market cap now stands at $641 million, down from a peak of over $40 billion. This is historic for the crypto market, says Mike Burrows, co-founder of the crypto investment firm Fortress Digital. This is a defining moment for the space due to its size and the impact in terms of the amount of people that lost substantial value. Here's what you need to know. So a stablecoin, to understand this crypto catastrophe, you need first to know what a stablecoin is. In essence, it is a cryptocurrency that is pegged to a more stable currency. The biggest such coins are Tether and USDC, which, like most stablecoins, are both tied to the US dollar. So if you have 1,000 USDC tokens, for instance, they can be at any time exchanged for $1,000. Stablecoins are an integral part of DeFi finance, designed to be ways for investors to hedge against the volatility of the cryptocurrency market. Say Ether's price is $1,900 where it is today. A trader could exchange one Ether for 1,900 USDC tokens. If Ether drops 50% to $950, those 1,900 USDC tokens could be exchanged for 2 Ether, since the USDT is designed to retain its $1,900 value. When investors smell a downside coming, they put their money on stablecoins like Tether and USDC, and until this week, UST. The Terra USDT coin is different from Tether and USDC in a key way. Tether and USDC are backed by actual US dollars, whereas UST is what is known as an algorithmic or decentralized stablecoin. The idea is that through a few clever mechanisms plus about 1 billion of Bitcoin reserves, the UST dollar peg can be maintained without it having to be backed by actual US dollars. A decentralized stablecoin is the holy grail of DeFi, explains Cyrus, former head manager with at MakerDAO, the group behind the DAO stablecoin. Bitcoin and Ether's selling point is that they are difficult for bureaucrats, politicians, and central bankers to control, but their downside is price volatility. If you could take those assets, extract stability out of them, and productize it, then that's huge, but it's not very valuable. Okay. So what was happening was Terra, Luna, and USDT, what are they? So Terra Luna is a blockchain just like Ethereum and Bitcoin. While Ethereum's blockchain natively produces Ether tokens, Terra natively produces Luna. Before the DPEG, Luna was trading at 85 cents. To create USDT, you need to burn Luna. So for instance, last week you could trade one Luna token for 85 UST since Luna was worth $85. But the Luna would be destroyed, burned in the process. This deflationary protocol was meant to ensure Luna's long-term growth. As more people buy into UST, more Luna would be burned, making the remaining Luna supply more valuable. To entice traders to burn Luna to create UST, creators offer an insane 19.5 yield on staking, which is essentially crypto terminology for earning 19.5 interest on a loan through what is called the Anchor Protocol. Instead of parking your savings at a bank for 0.06 interest rate, the pitch is for you to put your money in UST where it can earn 20% interest. Before Saturday, over 70% of USDT circulating supply, around 14 billion, was deposited in this scheme. Here's the key to UST, retaining its peg. One UST can always be exchanged for one worth of Luna. So if UST slips to 99 cents, traders could profit by buying a huge amount of UST and exchanging it for Luna, profiting 1 cent per token. The first works in two ways. People buying USDT drives the price up, and the UST being burned, driving its exchange to Luna, deflates the supply. Then there's the reserves. Terra founder Du Kwon created the Luna Foundation Guard, a consortium whose job is to protect the peg. The LFG had about 1.5 billion in Bitcoin reserves. If USDT dipped below $1, Bitcoin reserves would be sold and UST bought with the proceeds. If USDT goes above $1, creators would sell USDT until it goes back to $1, with the profit being used to buy more Bitcoin to pad out the reserves. Well, what went wrong? USDT at the time of the writing was worth 44 cents. Something went very wrong. It all started this weekend. Over 2 billion worth of USDT was unstaked, taken out of the Anchor Protocol, and hundreds of millions of that was immediately sold. Whether this was a reaction to a particularly volatile period, interest rates going up, has particularly effective cryptocurrency prices, or a more malicious attack on the Terra system is an ongoing debate. Such huge sales pushed the price down to 91 cents. Traders tried to take advantage of the arbitrage, exchanging 90 cents of USDT for $1 worth of Luna, but then a speed bump appeared. Only 100 million worth of Luna can be burned for Luna per day. Investors already flighty in the current gloomy market flocked to sell their USDT once the stablecoin couldn't retain its peg. After reaching a low of 30 cents on Tuesday, the coin has rebounded to 44 cents, far below its $1 goal. Its market cap, which was around 18 billion just a week ago, now stands at 5.3 billion. It's even worse for Luna holders. The value of the Luna tokens has almost completely disappeared. After reaching a high of under $120 in April, Luna's current price is, well, this was yesterday, 19 cents. As you see, the current price is under a penny now. On the possibility of this being a malicious attack, some have speculated that an attacker attempted to break USDT in order to profit from shorting Bitcoin, that is, betting on its price going down. If would-be attackers created a large position in USDT and then unstaked 2 billion at once, it would depeg USDT, which would mean the Terra team would have to sell portions of its Bitcoin reserve to repeg the stablecoin. Once investors saw that USDT lost its peg, they would then rush to unstake and sell their USDT, which required more Bitcoin reserves to be sold, adding further sell pressure. Again, this is speculation. Speculation, guys. Why does this matter? It matters because first, over 15 billion in crypto value has been wiped out through Luna and USDT alone. Second, it raises questions about other stablecoins. And third, the possibility of this collapse has caught the attention of politicians and regulators. They're definitely going to want to regulate crypto. This is the picture of the founder, Don Wong, who created Terra USD. His offices in Terraform Labs and Seoul last month. Why did cryptocurrencies Terra USDT and Luna unravel? Stablecoin price exchange. Explained. This comes from the Wall Street Journal. And I want to go over this as well. So I'm not going to go with what is a stablecoin and why is it popular. Those are things that you guys should already know. I want to go over something key in this article that I thought was key. So what regulators are doing, I want to focus on that part. The episode has also refocused policymakers' attention on the lack of regulation around stablecoins and the broader cryptocurrency market. As Terra USDT decoupled from its peg May 10th, Treasury Secretary Janet Yellen renewed calls for Congress to pass legislation to govern stablecoins. At the same hearing, Pennsylvania Senator Pat Toomey, the Banking Committee top Republican, expressed an interest in moving quickly on related legislation. Securities and Exchange Commissioner Gary Gensler has spoken in the past about potential risks that stablecoins pose to investor protection, illicit activity, and financial stability. Mr. Gensler has declined to speak about the recent turmoil in the crypto markets. You have to understand that this collapse, $15 billion is a lot, and you're going to see people clamoring for regulation. And the good thing about that is this will, I believe this will help clear up some of the weaker coins in crypto. And someone else said that crypto evangelists tend to see meltdowns like Terra as an unfortunate loss, but one that ultimately helps reinforce the credibility of the underlying blockchain technology. I do think that the ruling process of good ideas and questionable ideas ultimately makes the ecosystem stronger. The economy has totally shifted to the speed of the internet, but the financial system is still working at the speed of the post office. Unfortunately, there are these moments of creative destruction that can actually end up being some of the best ways of kind of narrowing things down to what people can really get behind. So this is going to create, I think, products that people really get behind. Now, this is dangerous because Luna's founder's wife under emergency protection after crypto death spiral plunges coin to zero. So yeah, Don Kong's wife is under protection right now. That's how serious this is. 15 million people were suicidal after losing everything on Terra Luna. So yeah, definitely. I want to say this. The latest indication suggests that the supply of Luna coins on circulation went from a few hundred million to now 6.9 trillion, with the tokens trading at levels virtually near zero after hitting an all-time high of $119 last month. And I said this in my list of reasons: do not buy Luna. Do not buy Luna if you can. It's already delisted on most exchanges anyway, but if you have a place to buy it, someone's trying to sell it to you, don't buy it. And here's the reason why. Well, trust is gone. The liquidity has been delisted from several exchanges. It has a much larger supply now and uncontrolled printing from different areas. And they're probably going to have to come up with a new token and contract in the future. So these are the reasons I'm telling you do not buy Luna, because the trust is gone. The liquidity is gone. It's going to be delisted from exchanges. There's uncontrolled printing, and there's a large supply now. And they're also going to have to come up with a new token and contract. So I'm telling you, do not buy Luna for those reasons. And we'll go over that in here in the future. So what happens now with Luna? Okay. So Binance delisted Luna as well. Exchange Mint Binance explains why they delisted Luna. CZ says, very disappointed with how USDT Luna incident was handled or not handled by the Terra team. We requested the team to restore the network, burn the extra minted Luna, and recover the UST peg. So far, we have not getting any positive response or much response at all. Per his statement, some users might be unaware that Terra developers were still minting new units of Luna outside the exchange. CS said the minting would lead to a further crash of the asset's price immediately if deposits were allowed. So they stopped it. Other exchanges, Corbett warns against trading Luna. And here's a list of exchanges that have delisted Luna: Binance, Crypto.com, Bybit. So those exchanges, the major backers, have delisted Luna. If you come here on CoinGecko, which keeps an up-to-date list, it still has Binance on here, but Binance has already delisted Luna. FTX already delisted Luna. This list is not up to date. A lot of these exchanges have already delisted Luna as well. So you may be able to get Luna on the decentralized exchange, but I'm highly recommending you guys do not buy Luna. And those are the reasons why I say do not buy Luna. Like I said, I'm going to post that list again. He has, the founder of Luna has came up with a plan to revise Luna in a decentralized, in a token redistribution plan. But obviously that's going to take some time. Kwong has proposed that validators should reset network ownership to 1 billion tokens, distribute among Luna and USDT holders, as well as a community pool to fund future development. Specifically, 40% of the newly distributed tokens would go to Luna holders who held the asset before the depegging event. 40% would go towards the USDT holders on a prorated basis at the time of the new network upgrade. 10% would be allocated to Luna holders just before the chain halted operations, and the remaining 10% would go to the development pool. Regarding the USDT ever being repegged to the US dollar, Kwong says unlikely would make a difference given the mass liquidity events across the Terra ecosystem this week. In other words, trust in the stablecoin model has been eroded permanently, he explained. Even if the peg were to eventually restore after the last marginal buyers and sellers have capitulated, the holders of Luna have been so severely liquidated and diluted that we would like the ecosystem to build back from the ashes. Although there's no way to fully restore the blockchain's value, Kwong has said the redistribution plan has to compensate the network debt holders and loyal community members and builders. So, the plan, though, failed to win favor among the community of so-called lunatics as the price of Luna and its sister token continued to plummet. So yeah, that's what's going on here. So, I would recommend, like I said, I would recommend not buying Luna right now. I would recommend staying away. I would also recommend that you stick with the more stronger projects in crypto like Bitcoin. I think this is a great time to buy Bitcoin. If you're looking at Bitcoin right now, I'm really thinking Bitcoin and Ethereum right now. This is a great time. I think we're at getting close to the bottom of this current downturn. And I think this is a great time to buy Bitcoin at 29. Bitcoin's at 28,000. Ethereum's at 1,900. This is a great time to buy those two coins. The other coins I'm not so sure about, but I think Bitcoin and Ethereum will be around. All right, guys. So this is a great time to get to Bitcoin at 28,000 and Ethereum at 1,900. All right, guys. Thank you for following my video. I appreciate your support. Thank you for following the channel. Check us out at cryptomillion.co if you want to get more inside information. Check us out there. God bless America. Be good to each other, guys. Thank you.